Welcome back. After private equity players sat on record levels of dry powder for some time, Canada saw an uptick in mergers and acquisition activity in the third quarter, just passed. With interest rates easing, is this pickup likely to continue? And what about the threat of tariffs from the United States? Let's talk about all of it with Richard Betsalel, Managing Director of Crosbie Company Inc. Richard's joining us virtually, as you can see, from Toronto today. Richard, thanks a lot for seeing us. What did we see in the third quarter in terms of Canadian M&A?
The third quarter was another positive quarter on the road to recovery. The M&A markets kind of bottomed out in that post-COVID era, and now they've had 4 consecutive quarters of growth. And we're hoping to see that extend into the fourth quarter and then again into 2025. So we're bullish on M&A overall. Some of the big deals that were
announced or concluded in the quarter: Hudson's Bay Company buying Neiman Marcus Group, a $3.6 billion transaction. WSP Global, the big engineering and construction firm, a $2.4 billion acquisition of Power Engineers. And Alimentation Couche-Tard, which has been a serial acquirer over the years, a $2.2 billion acquisition of Get Go Cafe and Markets. And lots of talk, obviously, about the deal that Couche-Tard wants to do in Japan as well. Do high-profile deals like that, announced by high-profile companies, do they improve the sentiment in M&A?
I think it certainly helps contribute to overall psychology. I think psychology is one of the most important factors in M&A. People start to feel good about their own business, the economy, their prospects. They're more likely to either take their company to market, or if they're on the buy side, to engage in a search process or to make an acquisition.
Okay, what about lower interest rates? Of course, the Bank of Canada cut its benchmark rate by another 50 basis points yesterday. Do declining interest rates from the central bank and from big Canadian lenders, does that play in at all to a lower cost of capital for companies looking to do deals?
I would say it certainly does. I would say the larger factor is the availability of capital overall. So when you look at private equity, for example, globally, there's about $2 trillion of dry powder available. When you factor in leverage, that's more like $4 trillion of purchasing power. And then on top of that, you have the banks and other non-bank lenders that are really looking to put capital to work. So when you combine that with lower interest rates, it really creates a great environment for M&A.
And that dry powder is held on the part of private equity investors. Is that correct?
That's correct. And that would be, traditional private equity funds, family offices, and all sorts of other vehicles that are just looking to buy companies on a private basis.
So we've talked about big deals. We've talked about lower central bank interest rates. What other factors will encourage some of that dry powder to be invested?
I think just as the economy continues to improve, obviously the U.S. is much better off than we are here in Canada. The Canadian economy currently under some threat by President-elect Trump and his tariffs. But we see that as probably more of a temporary factor if it actually kicks in at all. So the overall economy and, again, the psychology that creates helps drive M&A.
Why do you view Donald Trump and a tariff as a temporary factor? I mean, he is very, very pro-American in many of his policies in terms of favoring companies. And we just heard him say so in New York. He's speaking in New York right now, favoring companies who make their products in the United States. Why do you view the Trump threat as only a fleeting one?
It's probably a means to an end. He has an end goal. I assume that he's going to try and achieve that by using these threats. We're not of the belief that if the tariffs come on that they're going to last forever, or that if they do come on and stay that they will be highly targeted. That obviously will affect certain sectors rather than others, but on balance, the Canadian economy, when you think about it, there's a lot of resources and there's a lot of services, and those are not things that tend to attract a lot of tariffs.
Which sectors in the third quarter were most active in M&A, and which sectors do you think might be most active in 2025?
Well, this being the Canadian economy, you always get oil and gas and mining. Those are always two of the top sectors. We have very robust markets, capital markets for both of those areas. And so as a result, there's lots of small junior mining and oil and gas deals, and there's lots of M&A activity going on between them. I think going forward, I would expect technology and IT companies to continue to be active. Those are markets that are going to benefit from the development of AI. And there's lots of opportunity there. And then industrials that are starting to incorporate that technology into their systems, really applying it to the day-to-day manufacturing process. We see those being robust areas.